Welcome back to the Eric Krown Crypto channel, wishing you a happy and healthy start to this nice Tuesday morning over here as we get prepared for the big event of the day, baby. The big event of the day. There's CPI prints coming in today, right before U.S. market open. And then guess what? Wait, there's more. There's more, actually, and an even more important one on Wednesday with the FOMC meeting, the last one for the year as well. I want to reiterate my stance on things currently. While Bitcoin could, come back down and test around the lows, I do still stick with what I've been saying, and I'll actually be providing another piece of information here. That Bitcoin very unlikely to be closing on new lows, at least until the end of this year. Personally speaking, if we are going to see new lows, assuming that the current lows are not in, well, I do believe that would be happening around the end of Q1 of 2023, beginning of Q2 2023. Anyways, in this case, I want to start off things. Oh, by the way, addressing that yesterday, I think I did not do the best job of explaining the HPDR indicator. The reason being because we got a bunch of emails about it, and no, it does not come with the quant program. You do have access to the data, the statistics, this stuff over here for the strategies, however, and that's going to be strategy number 15 and 16. So same sort of setup as number 6 and 7 with the Jewel Light. The indicator is not included, but you can see the strategy and see how it operates. And there's also a video demonstration on YouTube as well. Anyways, start off things with the newer piece of information. This is a put call ratio, actually tweeted out by Zero Hedge on Twitter. This one certainly caught my eye because we are looking at multi-decade highs in puts versus calls here, which is of great interest because, again, what's the statistic with this? Well, 80% of options expire fucking worthless, baby. That's right. All of your lottery tickets are fucking worthless. But in this case, because puts are so heavily outweighing calls, I suspect that, big money managers are probably trying to protect into end of year here. But, because the puts are so great in comparison to the calls right now, very likely that if Bitcoin even does come back down to the current lows, it's very likely to bounce from there and very likely not to close on new lows, at least until these, at least until we see these expire, which will be at the end of the year, I suspect. Anyways, let's now follow up on yesterday's setup that we were looking at for the HPDR indicator. It was right in over here. We were looking at a close below the bottom of the blue 50% zone. So that's 50% of returns, historically speaking. That initiated the secondary condition where we then cross-check for a decline on the moving average of the of volatility. So that's going to be represented by the BBWP indicator right here. It happens first at this green vertical bar. That fired off the setup right here, and then that initiated these statistics that we were referencing over here. And I'll just briefly show again this 30-minute time frame. Blah 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 blah. And we were looking at a 74% win rate, meaning that 74% of the time when that setup is found, we can then reference these statistics. And for the win side, we did look at an average percentage gain of 1.57%. If we go and cross-check the data, well, from that setup given to the next major high, this is on a wick basis, and I take things, I do actually look at things a little bit differently, but this would be almost a 2% gainer, as you can see, which is actually still well within the data, because that's a little bit closer to the top side of the first standard deviation right there. But again, played back up to the top side of the range, so that one essentially was fulfilled. Again, I do not, because we have been using the HPDR indicator, I've been, showing these setups a little bit more frequently with it. I don't want to, and more importantly, they've been working out. I don't want to give you the impression that these only work in that regard. Again, we're talking about statistics, not certainties. So it's naturally speaking, there's going to be some failures here. We have data for that as well, obviously, but 74% win rate is not the same thing as 100%. So please do understand that naturally these will fail the more and more time that I do speak about them. But for right now, we've been having a pretty damn good track record. So fair enough. Anyways, at the end of the day, now that setup has been hit, there's nothing else to be called from that. So for the people asking what's next? It's there's no other setup on the board as far as I can see for any time frame that I pay attention to, even down to a fucking super low time frame. So in this case, target was hit. Bitcoin goes back into a sideways, a sideways range, which I expect that will probably, continue with until today's event minimum. Anyways, now going back into my own notes and going into the basically the medium-term time frame ranges for CME over here. Same thing as before, 17,400 to the upside versus 16,650 to the downside. Close below 16,650 minimum on a 4-hour time frame. And yes, I would be looking for the next major move to the downside, very likely below 16,000. $15,000, likely finding some sort of a balance between 15.6 to 15.9 or so. Personally speaking, I actually do think that things likely try to the upside from here. The reason why I believe that is a few fold. So let's actually start it off with the daily. Daily volatility is on extreme lows. I mean, extreme lows right here. Plus the 12 hours also on extreme lows, plus the 6 hours also on extreme lows, plus the 4 hours also suggesting a nice little dildo party coming in as well. So with that in mind, we can then go cross-reference some indicators. 12-hour RSI is given a drive of hidden bullish evidence, a phantom drive, I should say. Also even has a bit of an inverted head and shoulders in there. Not that I really care too much about these things. And then also, more importantly, the 12-hour jewel does have a continuation signal here as well. So I do still favor the upside. Of course, I'd like to see an actual break above 17.4, but yes, generally speaking, I do still think Bitcoin is a lot more likely to see above 18,000 first, probably even above 20,000 first, before potentially going to lower lows later. I still do not I don't have enough data to say that the macro low is in, nor do I have enough data to say that it is definitely not in. So it's kind of unhelpful right there. Yes, so we've gone through that. Let's now go cross-reference stochastic momentum and see what's up. Starting off with the daily. Daily stochastic momentum pivot is currently at 16,950. Then we can go down to the 12-hour, which is currently showing 17,150. By the way, recognize these numbers because they're going to be popping up a lot. 6-hour time frame is going to be 17,000, so kind of cutting it to the middle there. 4-hour time frame is going to be pivoted at 17,100. Holy shit, man, they're literally all in the same little vicinity. And the hourly is currently pivoted at 17,150. So again, what does that likely align with? Bit of sideways price action into today's event, probably a try to the upside. And then the real question is which side actually breaks. Personally speaking, I do still, again, think that Bitcoin's a lot more likely to trade to the upside than the downside. There is a mean reversion play based off the 5-day chart here. I won't go through the full explanation of this, but basically we have seen the 5-day setup that was born in early November already expire. It's not that expired, it's already played out. It wasn't the most impressive one of all time, but did work for a little bit of a gainer right there. Anyways, typically after we do see the stochastic also to cross in the opposite direction of the official setup, we're going to see a mean reversion play. So, again, anywhere into shallow 18s is fair game for that. Could be as much as, 20,000 plus. But ultimately, I am still biased towards a try to the upside between now and early January, a try on the higher term timeframes. Anyways, I think that's a good place to be leaving off on this particular video. I understand that's a little bit on the shorter side, but realistically, until we get something a little bit more weighty, which I suspect will happen, around CPI print times, I would hold back on making any sort of other statements. And there's really not any other statements to be made, at least that I'd be comfortable making as of right now. So with that in mind, we'll come back maybe later today if it warrants enough for an intraday video. Very likely, or as always, tomorrow as well. And we'll kind of pick up where we left off as usual. And tomorrow probably is going to be a bigger day as well, being that it is FOMC day and the last one for the year. But other than that, I want to be wishing you the best as always. Forgot to show Bybit. Bybit's got their promotions going on for 0% on maker fees for derivative contracts, only with the link in the description below. And then they also got their Apex decentralized exchange, which if you're worried about all of the Binance and exchange FUD, it's like well-grounded FUD, it's like you might lose all your money, right? It's like you might not just lose it from fucking trading, but you might just lose it because you're on exchange. Probably the safest way to do it is to be on a centralized exchange. That means that you can essentially trade directly from your wallet, so you don't necessarily have to trust the exchange to be your custodian. Apex is Bybit's version of that. They probably are going to be one of the best ones. So I have a link in the description there for them as well if you are so inclined. All right, that's enough shilling for one day. I want to be wishing you the best as always. Take care, much love, and see you hopefully soon.